Thank you so much for joining us today on the Think Realty podcast. Whether you're listening by download or whatever way you consume podcasts, or if you're viewing us on YouTube or one of the social channels, thank you so much for joining us, giving us a few minutes of your day. I hope that we will do well by you by bringing you some great content as we always try to. And make sure that you comment below any of these outlets so we know what you think, what questions you have, and we'll guide you along the way. Before we jump in, let me say a quick thank you to our podcast sponsor. This episode of the Think Realty podcast is brought to you by Link Capital, the preferred lender of experienced real estate investors offering residential, renovation, construction, rental loans. As an expert private lender, their dedicated team is here to help you through every stage of your project. For more information about Link Capital, visit Lynk, L-Y-N-K, capital.com or 908-LOAN-PRO, 908-LOAN-PRO, and they'll help you there. Today, I have someone who is no stranger to the podcast. Matter of fact, I've interviewed him a few times, and he's always such a great guest. We decided to keep bringing him back because I want to always provide value to you. So, Zach Lemaster is on today with us. Are you with us, Zach?
I'm here. I'm excited.
Good.
Thanks for having me, Eddie.
Very good. Where are you located today in the country?
Well, we're based out of Denver. Right now I'm up here in the great north in Canada, in Edmonton, Alberta. Okay. So this is one of our markets we invest in. Yeah, it's staying warm.
Very cool. Is it freezing cold up there?
Yeah, I always have to do the conversion to Celsius, and I think we're about -5 right now.
Wow.
So,
yeah,
and that's it's not warm.
Yeah, brutal. I mean, at least in Denver, it's not quite as cold, and you get a little bit more of the fluffy powder snow, which is always nice. But very good. So Edmonton is a good investment market.
It's a completely different ball game. I mean, quite honestly, the reason we invest here is simply because we have family. My wife is from here, and she comes from a long-standing family of real estate investors, and they approach it differently here. So, but it's a constant reminder to me. I mean, we're obviously based out of the U.S. and most active in the States. It's a constant reminder to me about how beneficial it really is to invest in the States. For example, just from a lending perspective, there is no such thing as a 30-year fixed mortgage in Canada or any other country. Yeah. And the tax advantages in the United States for investing in real estate, it's unparalleled anywhere else. And so while we do own real estate here and have for many years, I mean, it's just a constant reminder that the States has a lot of opportunity.
Yeah, that's awesome. I got a rude wake-up call when I tried to buy some property in Barcelona, Spain, and thought I would just run it like my traditional rentals in the United States, short-term rentals, and it was a little bit more difficult. But anyways, well, yeah. I love, obviously, if you are unfamiliar with Zach, he has a company called Rent to Retirement, and I love the concept because so many people, I've heard the phrase that goes like this, that if you want to be rich, flip houses. If you want to be wealthy, buy them and rent them, right? Like, wealth is about long-term creation, the ability to do what you want, when you want to do it, that true freedom. And I love that that's at the essence and the core of what you do and your team does. If you don't mind, let's back up. How did you get into real estate? You've got an interesting story, and I'd love for our viewers and listeners to hear it.
Yeah, absolutely. I'd love to share that. And to your point about flipping and owning houses, real estate is great because you can participate so many ways. And the best way is, I think, doing all the above or multiple strategies and combining them. We are active investors, but then we turn it into passive real estate, use the tax advantages that creates our sustainable income long term. And I think that's just how you get light years ahead in real estate. But anyways, going back to a little bit about my story. So I have a background in healthcare. Nothing to do with real estate. I read Rich Dad Poor Dad, I think, when I was in my teens, and always had a bug for it. But ultimately, my wife and I went to optometry school in Oregon. That's where I met her, right outside of Portland. We practiced optometry for about a decade. A good portion of that, I was in the Air Force as a captain on scholarship, practicing optometry, and then we moved out to Colorado and owned multiple private practices. Throughout that entire time, we were investing in real estate. I mean, it started very simple as our first house was a duplex, lived in half, rented out the other half. And every single year, Eddie, since that first duplex, we bought more and more real estate. And this is going back about over the past 15 years. Every single year, regardless of market cycle, regardless of interest rates, it doesn't matter. We were buying more and more real estate. Yes, we had to adapt our strategy and buying criteria throughout that, but ultimately, and investing out of state, right? Not just in our backyard, but broadening our horizons to invest in different locations where we can achieve better returns and diversify. And through that, especially investing across the country in the best locations, it allowed us to replace our active income in the healthcare world. We retired from those career paths early in life and built our company Rent to Retirement, which essentially helps people to invest in turnkey properties where we've already done the groundwork and built the systems and teams for them to be successful in the locations that we found to be productive without having to build their own team and do the heavy lifting. And so kind of fast forward to where we're at right now, we work in 11 different markets. We have single family, multifamily, new construction opportunities, some of the same stuff that you're doing on the build to rent. So we're in the exact same markets. And we're personally actively buying. We've built a portfolio personally of over $100 million at this point, but that's been over many, many years of consistently investing. So that's about as quick as I can give you on the cliff notes.
Yeah, that was really, really great. The reason I like your story so much is that when you get into the more sophisticated rooms in real estate investing, it's inevitable that you'll find someone who's in the twilight of their career that are coming to someone with a lot of real estate knowledge or investing knowledge and saying, okay, where do I put my money now that I've created it, right? And it's like, it's so fascinating because you are an optometrist. I was talking to Dr. Alex Buriak, who is one of the jet lending guys, right? It's like, and it's so fascinating that most of the time that I'm speaking to the higher echelon of real estate investors, it's usually doctors, dentists, chiropractors. It's these like higher net worth people that now have the capital but don't have the time or the ability to invest it, and now they're kind of like coming full circle. So I feel like you jumped the curve and essentially cut off massive years to get to where they all are trying to get to in the twilight of their life. And I love it. I think it's a fascinating story because it's so ironic. We work our whole lives trying to get to a place where we can retire. With real estate, it's such an amazing vehicle, like all the things you talked about. It helps us get there faster, but with more control. And I love that you provide that as a mission for a lot of people around the country. Talk to me about real estate markets that you like today. With all the issues, turmoil, things like that going on in the marketplace today, flight of people going out of this state, moving into that state, job movement. There's just so much going on. What markets are you really excited about today?
Absolutely. And I'll start with just fundamental criteria of areas that we look for in a market that we want to invest in. We have a very strict criteria of, hey, we know that this is going to be a successful market and a market that we're going to build a sustainable portfolio long term. These are areas that have landlord-friendly legislation, low taxes, future population, and economic growth. Obviously, being in the path of progress is where you want to be, but you need to be conscious of many other criteria. Areas that have a diversity of industry and economy. They're not just reliant on oil or gas or automotive or whatever the case is. Areas that have high rental demand and high rental rates relative to home prices. Obviously, you need to be in areas that have positive cash flow. So that's some of the criteria. And then it comes down to the boots on the ground team. That's really where the rubber meets the road is having the boots on the ground team that allow you to be successful. But the markets where we see being in the path of progress, that we're most excited about, I mean, hands down probably is Florida right now is the top market. I know that you're invested heavily in Florida as well, and so am I personally, as well as our business. Just the Southeast, that Sun Belt where we have a large population shift. Texas is great. You need to be conscious of the property taxes there because they are getting progressively higher. Also Alabama, the kind of area between Birmingham, Huntsville, and Montgomery. I mean, there's a lot of opportunity and a lot of growth, especially in the tech space coming in there. So we want to try to be, again, in that path of progress. We, of course, still invest in the Midwest. These are kind of your bread and butter housing solutions that are really recession proof, because when we talk about, and I think this is extremely relevant right now, a lot of people are wondering like, well, what's happening with real estate? We've been through this, like, okay, we're in a recession and we've been through this interesting period where home prices really haven't dropped that much, right? Everyone's expecting, and they've been talking about this like correction for like 8+ years now, and it just really hasn't happened. And the people that have sat on the sidelines have missed this crazy appreciation over the past few years. But that hasn't really changed. There's still housing demand. There's still a dramatic undersupply in many areas, and those are the areas that we want to be in.
Yeah, that's great. The economists say that a robust, healthy economy should have about 6 months worth of inventory nationwide, and we're sitting just barely over 3 right now. So we're just not seeing the decline of housing values. And so all these people that sat on the sideline for the past 6-8 months just waiting for the bottom to drop out, it just hasn't happened. What do you think about, obviously you talked about the kind of smile states a little bit, southeast part of the country. Any micro markets, like for instance, I've done a lot in Cape Coral specifically. Now I'm really looking heavy into Jacksonville. Probably going to buy my first property there here in the next 30 days. It's like I'm looking at almost like these micro markets inside of the macro kind of Florida, Texas. Is there any that you're looking at that you're like, that one has a lot of promise? You talked about Birmingham, which I love Birmingham because there's so much, like you said, tech advancement. Huntsville, especially with NASA and all the tech advancement there. Any other just like little micro markets?
Yeah, absolutely. And I mean, this goes down to the microeconomic scale of like even within a zip code or a city, like what specific area within a quarter square mile do we want to be in? Where is the job growth coming, and where's transportation? Where's the gentrification going on? So I mean, that's all important for us to look at all the way down with a microscope to specific neighborhoods. However, I think to answer your question, some areas are, well, I think you could probably be successful throwing a dart at the map of Florida and being okay. I think areas that are really exciting, absolutely southwest, there's this huge, obviously there was just a hurricane that came through, which displaced people in housing that in an area that already had an undersupply. And so that we saw that increased demand. It did slow building. A lot of new construction is delayed quite a bit in that area. But areas that we are really heavily focused on, absolutely Southwest Florida. Most importantly for me is Polk County. So like Point Siena, Haynesville, we look a lot at secondary markets where we have a lot of buying opportunity based on price points, but you don't have these overinflated house prices where the rents don't necessarily match. For example, areas surrounding Orlando, within kind of an hour commute, I think there's a lot of opportunity. The population is still growing dramatically, but it's still affordable housing. I think that's the most exciting area to me. So we look at Pensacola and surrounding locations within an hour commute to Orlando, kind of that corridor between Orlando and Tampa, and then of course Southwest Florida. I think those are where we've seen some of the best opportunity. I mean, we've seen just over this last year, Eddie, I'm sure you realize this with some of your properties, but we saw a 22% increase in rent over last year. That's crazy because that's a bottom line ROI increase for people that own in that area. Your mortgage isn't changing, but rents are going up. And that is a very relevant point right now when people are looking at interest rates and saying, hey, well, cash flow isn't super attractive. Well, maybe project. I mean, you don't want to speculate too much, but look at some historic data and try to invest in areas where, sure, maybe year one is not super attractive cash flow, but in an area that has strong rental growth, it surely will be in the next 2 to 5 years, regardless if you refinance or not. So those are some of the areas that we're very focused on. Yeah,
that's great. Kind of last question here. Time always goes fast on this podcast, but last question, build to rent. I know a lot of people are afraid of new construction now because so many people got in trouble in new construction 2008, 2009, 2010. Talk to me about your thoughts on build to rent fairly quickly, on just like where the opportunity is. Is there opportunity there, and what does the opportunity look like?
There most certainly is opportunity in build to rent. The I guess attraction to build to rent would be that you're creating immediate equity. To be very specific, a lot of our building teams build a 4.2 for like $300,000. This is kind of it's this upper BA class area in say Southwest Florida. When that is completed, at least at today's valuation, it could be worth over $400,000. So you have potentially 6 figures of immediate equity. However, it is important to note that, I mean, that's the goal, but this is kind of an unprecedented time for building because we have material costs escalating and inflation. Inflation affects everything. And so you just need to be conscious going in. There is that opportunity for immediate equity, but there's delays, and you just need to be really sure that you have adequate financing in place if you're financing the construction. So we love build to rent, and it is in the speculation area. But if you do it right, and most importantly, if you're in the right area, it can be a way to really expedite your investing success, because we have investors that have been able to cash out, refinance, pull all of their money back out of those builds and have a cash flowing asset that they're net zero in, obtaining infinite returns, or selling within a short period of time and doing a 1031 exchange and then, branching out their portfolio. So just be educated, work with the right team, be in the right location, but lots of opportunity in the build to rent space.
Yeah, that's great. It's a great point. It's what's happening to us down in Southwest Florida, is that we can essentially buy a piece of land, build the house, and on the completion of the house, occupancy permit, we've already gained almost $100,000 worth of equity, which essentially in refinance allows us to kind of pull out all of our capital. So we're at kind of a net zero with all this additional equity sitting in there, which is amazing. Very good. For those that are watching that want to hear more about rent to retirement, how do they get a hold of you? Where do they find you?
Yeah, and just the final thing on that point. Also, I think being in areas where you have the option to long or short-term rent, that's also a unique place where you have a lot of exit opportunity and can really increase the cash flow with being in areas that could be a short-term rental.
Sure.
So anyways, if we'd love to speak with anyone that is interested to learn about turnkey investing, build to rent, or just connecting with our team to look at any investment opportunities we have available, they can go to our website. I think is the best place. It's rent2retirement.com, rent-to-retirement.com. That has links to all of our social media. Our 800 number is 800-311-6781. And we'd love to have a consultation with you to just talk about your investment goals, tell you about our business, and see if it's the right fit for you.
Absolutely. Zach and his team have been longtime Think Realty supporters, and I thank you guys so much for the support for Think Realty. And if you're watching today and you're not really sure how you're going to get to retirement successfully, you got a good W-2 job, whatever it is, you got some money set aside, it costs you nothing to get a hold of Zach's team, sit down, walk through a consultation, see what he's talking about. Actually look at properties you can purchase. And by the way, it's turnkey, it's true turnkey. So he's already done the work, he's already found the deal, he's already rehabbed the property, he's putting the tenant in, he's providing property management, and it's like it's true turnkey. And so for you, you can just purchase it, use leverage to purchase it, maybe a little bit of a down payment or whatever that is. Look at it, check it out, and see if it makes sense for you. I can tell you as a real estate investor, my retirement is completely tied to cash flowing and appreciating rental properties. It is not tied to the stock market. And I know a lot of you watching today feel the pain of where your 401k is today and what it's done over the last 6 to 12 months. And you owe it to yourself to at least see if there's a better path forward. You don't have to take action, but go check it out and see if there's a better path forward. And I highly, highly recommend Zach and his team, as well as Rent to Retirement and Turnkey Properties for sure. Single family rentals is really hard to go wrong with. And so, Zach, thank you so much for being a part of the show today. I hope that a lot of people come find you and have a talk with you to see how they can get to retirement effectively.
Thanks so much, Eddie. It's been a pleasure.
One more quick thank you to our podcast sponsor, which is Link Capital. Link is a private money lender, so they're a non-bank lender, and you can get private capital from them. This episode is brought to you by Link Capital. They're a preferred lender of experienced real estate investors offering residential renovations, that's fix and flip, construction, and rental loans. As an expert private lender, their dedicated team is here to help you through every stage of your project. For more information about Link Capital, visit Link, L-Y-N-K, capital.com. That's L-Y-N-K, capital.com. Or call 908-LOAN-PRO, 908-LOAN-PRO. If you're a real estate investor today, I want you to do two things. Number one, I want you to consider coming to the Houston Think Realty event in March. We put on a fantastic show for little money, and we do this as a service to our industry. We will put fantastic education on the stage. These educators are not there to sell you something, or they're those that we've tapped on the shoulder and said, would you come provide great content for our attendees? I want you to consider coming to that show. We do 2 shows a year, and I want you to choose one of them to go to. If you're in the Houston area, Texas area, you're in the West, I want you to go to Houston. It's a fantastic show. We've got an amazing lineup for you there. If not, you're in the South or Southeast or maybe the entire East Coast, come to our Tampa event that's coming up later this year. And so number 1, I want you to consider going to one of our events. Number 2, I want to make sure that you're getting our magazine at your doorstep every single month. You can go to thinkrealty.com to sign up for our magazine, or you can go to the Barnes & Noble nearest you and pick it up off the magazine rack there at Barnes & Noble. We provide that for you with lots of great content and information. Thank you so much for being a part of the Think Realty community. We want to hear from you. Comment on social or below this content, and let us know what you need more of, what you think, your concepts, where you think we should be investing in, what markets are hot for you. Let us know. We'd love to hear from you. Have a great day and happy investing.